CrowdStrike shares up today after the company reported better than expected revenue. However, its projection for lower third quarter revenue has raised some concerns. Let's go to Kingsley Crane, Managing Director, Equity Research Analyst at Canaccord Genuity. Thanks for joining us today.
Hi, Marilla. Thanks for having me.
So shares had dropped initially after earnings were first released. They bounced back, since up about 3%, I believe. What do you think investors were first reacting to?
Right. So I want to start out, I want to say that we've covered the company a long time. We love the company. We love the technology, the team. We're a bit more balanced on the stock of these valuations. As you pointed out, Q2 was a nice beat with $221 million in net new ARR. Results are starting to turn slightly faster than expected by management as we work our way out of this IT incident transition. The Q3 and fiscal year revenue guides were a touch light in our view. I think the market's looking through that. I think there remains some questions about the shape and scope of that upward recovery in revenue as we continue to digest that incident from the summer of last year.
Okay, so let's talk about the July 2024 outage, which you referred to. It crashed Windows. Are they still being affected by what happened then?
There are really two sides to it. On the one hand, there is a mechanical overhang. Management still sees a $10 to $15 million revenue headwind per quarter. There's some cash payments in Q3 tied to remediation. That's more timing and discounting noise than true demand destruction. On the other, CrowdStrike did extend some concessions to keep its large base of customers in their seats. You can sort of think of it in some cases like a COVID deal on an apartment. Now, the question is, upon renewal, will these customers that have been introduced to more products and have baked more consumption into their contract, will they renew at the same kind of upsell rates that we've historically seen for CrowdStrike that they've done so well with? So that remains to be seen at this point.
Okay, so sorry, did they discount products for companies who had to deal with that outage, or what did they do for them?
There were a number of levers that they pulled. Typically, they moved to sign longer term deals, and then they would embed more products into the deal. Maybe a company hadn't used identity security before, maybe they hadn't used log scale SIEM before, but that could be included in the contract. And there were some slight discounting measures in that regard. So upon renewal, if the customer ends up using a lot more of those products, then it could lead to more upsell, but that remains to be seen.
Okay, so the company has recurring revenue. Obviously, it is a security online company, and I guess monthly or yearly they get paid. But how much new revenue do they get, and where does that new revenue come from? Just new contracts signed?
New contracts signed, so they still have a successful new customer motion despite their scale. I think really where the story is heading as well is not just endpoint. This is much bigger than an endpoint company, but areas like identity security, cloud security, log scale SIEM. That SIEM product is nearly $1 billion in revenue at this point, or those three combined are nearly $1 billion, and the SIEM product's growing. It's doubling year over year. They just acquired Onum that can help accelerate some of the data pipeline into that product.
Yeah, what does Onum do?
Onum, you can think of it as allowing faster, cheaper data to be onboarded to support the SIEM that can help share gains versus legacy. This is already a fast growing product, but I think more interestingly, it's not just about supporting that one SIEM product for them, but also about improving the overall data piping between all of their products. And it could make other solutions like exposure management more useful as well. So we really like the acquisition. I think it was a smart move by them.
What about AI? Is it helping CrowdStrike? Is it benefiting its bottom line yet?
That's a great point. And we cover companies outside of security as well. I think, to be honest, AI has been better used by bad actors in this early stage of the cycle thus far. It's something that CrowdStrike has done a great job at integrating into their platform. In terms of that becoming a much more meaningful contributor to revenue, I think a lot of that upside we will see in the future. But they're certainly a leader in applying that in security.
Okay, so what are you watching for in the months to come from this business?
Right. So again, we're watching for continued success in these ancillary products that are becoming really more core to the business in identity, cloud security, and log scale STEM, and really tracking what we're hearing from the field on potential for upsells upon renewal, as well as ongoing changes in the security market with Google's acquisition of Wiz and Palo Alto's acquisition of Cyber. So it's certainly a very dynamic market at this time. We still like CrowdStrike's positioning, and it's certainly valued at a premium valuation. So it's one that we'd like to add on pullbacks here.
Kingsley Crane, I will leave it there. Thank you for your time. Kingsley's Managing Director, Equity Research Analyst, Canaccord Genuity.